This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Right, next step, step 3, all about recording the impairments. So remember where we are, what we've done. We've looked at the impairment indicators. We've done the impairment review, so crunch some numbers whereby if the carrying value is greater than the recoverable amount, there is an impairment. If the carrying value is less than the recoverable amount, then there is obviously no impairment. Step 3 is all about recording the impairment and crunching the numbers with the debits and the credits. Okay. So let's look first of all in this video at what happens if it is an individual asset and how we record the impairment. So an impairment is the reduction in value of an asset. So effectively you're going to be crediting the asset, debiting either profit or loss or other comprehensive income. Well, first of all, any impairment will go to profit or loss unless, however, it is a revalued asset. If you've revalued the asset previously, there will be a gain stored up within reserves. So therefore, any impairment would eat into that revaluation surplus first. If we exhaust the revaluation surplus, then any extra impairment would then go through profit or loss. Okay, that's it. That's the rule. What about the application? What have we got? So let's go through here and have a look at the second example on the individual asset impairment. Again, it asks you to explain. The explanation is done within the notes. Don't know why that. Well, I just knocked the plug. Sorry, Chris. So we can go through there, and I'll start with the example. Okay. So let's go through and have a look at the example on individual asset impairments. So it asks us to explain, but the explanation is done within the answers of the class notes. I want us to crunch the numbers. Crunching the numbers in the financial statements, because in a financial reporting exam, effectively that's what you're going to have to do in a multiple choice question, and that is what you're going to have to do in an individual company accounts preparation question as well. So financial statements, SFP, statement of profit or loss. Year end here is December X7. Okay, so should we get things started? Separate page of paper, head it up, SFP on the left, head it up, statement of profit or loss, and other comprehensive income. Okay. What does it say? It says a building was bought on the 1st of January 20x1 at $1 million. Useful life, is it there, of 20 years. So we will depreciate that over 20 years. Does that give me 50,000 per annum? Company uses the revaluation model, so that's going to be important because when it comes to looking at our workings, as soon as we see the revaluation model, we adopt that 4-column approach, don't we? Narrative, historic cost, revaluation, and then the surplus. So here we know that we have the cost of the asset. Was that on the 1st of the 1st X1? Was that there at 1 million? So we'll work in thousands. Okay. I think the answer in the back works in full dollars, but I've not got enough space. We then need to go through there, don't we, and depreciate it down to its carrying value. Well, what we've got there is that the revaluation took place on the 31st of December X5. So we need to work out the carrying value at the 31st of December X5, which to you and I is at 5 years. Okay, 1, 2, 3, 4, 5. use your fingers, don't be embarrassed. Count away. So what have we got? My accumulated depreciation for the 5 years. Take the 1,000, divide it by the 20 years, and then we accumulate it there, is it, for the 5 years. So I think that comes down, is it, to 250,000, giving me a carrying value of 750. And then on that date in X5, remember our year end is X7, so this is what's happened in the past. We need to know what's happened in the past to find out what happens this year. That 750 would have been revalued up to $1,125,000. So does that give me 1125 and a surplus, is it, of 375? That is what will have been recorded in OCI in 20X5. Okay, brilliant. But we're not really interested too much in X5. We want to know what happens in X7, don't we? So in X7, there was a fall in the market value of the property, led to an impairment review on the building, which revealed the value of the building to be 600,000. Okay. So what we need to be able to do now is we need to be able to get the carrying value down to the end of December X5. So there will be depreciation charged for, is it, X6. There will be depreciation charged, is it, for X7, which will then give me the carrying value at the 31st of December X7. Okay. So what have we got? Okay. Well, there were 15 years left, weren't there? So if we do the 1125 divided by our 15 years. So let's just double check on the calculator. 1125 divided by 15 is that 75,000 per annum. Which gives me, there is it, a carrying value of 975, doesn't it? Okay. That's what the asset was recorded at prior to the impairment. And what we are now told, aren't we, is that the actual carrying value on the 31st of December X7 needs now to be, is it, 600. Okay. So the carrying value is greater than what they have given us as the recoverable amount, so there is an impairment. Before you go through and calculate the impairment, get the easier marks first. We're told that there is an asset now worth 600. So on the SFP, within my non-current assets, within my property, plant and equipment, there is an asset worth 600,000. That asset will have been depreciated. The amount that has been depreciated in this year is 75,000. So there is a 75,000 depreciation charge. Yeah. There's nothing too crazy about what you see there. Okay. Yeah, I'm not saying it's easy, but they're the easier aspects, aren't they? Okay. What we need to be able to go through and do now is to work out what the impairment is. The impairment is a balancing figure. The difference between the 975 as it falls down to 600 is there's 375. Okay. So if I'm thinking about my journal entry, Then the journal for the impairment is that I am going to credit my PPE with the 375. What do I debit? Well, this asset has been previously revalued, so any revaluation goes to the revaluation surplus first through other comprehensive income. Now, what we've got to be careful of here is that we are told within the question that we opt to transfer any excess depreciation to retained earnings. So when we're going through and looking at that surplus that we thought we had of 375, that will have been reduced, because previously we charged depreciation of 50 per annum. We now charge 75, so the excess on the reserve transfer will be 25 each year. So does that give me 350? Okay. Is it 350? No, 325. Careful. I could hear you all shouting at me, Chris, no, that's wrong. It's 325, not 350. I heard you down the internet. There we go. It's magic, isn't it? So what have we got? 325 is what's in the surplus. We need to take 375 in total. So I'm going to debit my OCI with 325. And then the balance will go to my statement of profit or loss. And that balance is there as 50. Okay. So what we've effectively done is that we've taken 325 out of the surplus to bring that down to nil. And then this is where I find it's quite clever, is that the other 50 takes the asset, if it wouldn't have been revalued, from the 650 down to the 600. Okay, so if we hadn't have revalued this asset and just carried on as normal, it would have been held at 650. We would have impaired it down to 600, and that impairment would have gone to profit or loss. Even though we've revalued it, we've used the surplus, and then anything else has gone to profit or loss, and it's the same amount that has gone to profit or loss. Okay, at 50. Excellent. So there's the journal entry. We've credited PPE, debited OCI, debited the statement of profit or loss, and that debit to the statement of profit or loss is effectively a balancing figure. What was that? Where does the credit to PPE go? Doesn't really matter. Most companies will take it there as like a super depreciation charge and add it in to the accumulated impairment, or accumulated depreciation. Okay. Within my financial statements, you've got your impairment that you have that goes through profit or loss. And then you also have that your impairment, was it of the 325, that goes in that dangling down bit at the bottom of the statement of profit or loss, and OCI being the other comprehensive income. Okay, if we want to be specific, their expenses, so it'll be shown in brackets, and then that will be a negative figure in OCI. Okay, there we go. So again, wow, that was a bit more challenging, wasn't it? Those are going to go through there and appear within a published company accounts question in section B. So again, try to get the easier bits first, the carrying value, and then the depreciation. I think then everything else after that is just very hard indeed, isn't it? But stick to that wonderful diagram. Okay, wonderful working. You have a revaluation, 4 columns: narrative, historic cost, revaluation model, and then the revaluation surplus. If you can stick with that, you won't go too far wrong in any questions. So that's it for now in terms of, is it looking at an individual asset? The next video will go through there and have a look at how we record the impairment for a cash generating unit. But we'll save that until the next video. So grab yourself a cup of tea, take a break, and I'll see you all in a few minutes.